What's good, everybody? Today we took 3 trades, 2 wins and 1 losses. Okay, so let's get right into it. The first trade was a short. We made quite a bit, 3.55%. That would cover about 2 losses, which is very nice. The 4 hour was bearish, the 30-minute was bearish, and we shorted, right? I said this was a banger trade. I followed all rules, entered on a fair value gap plus an inverse fair value gap and a break of structure. I manually closed out the trade for huge profits. We hit so many take profits. We entered like towards the end of London session, and it carried out throughout New York. Here's the end of London session. We entered around here and boom, just blew out all of our take profits. So it was a very nice, very good trade. So nice. I was praying the whole time, dedicating this trade to the Lord, and I just felt really good about it. There was one thing I wanted to say, but I will get back to that. The next trade was a short, but we lost. The 4 hour was bearish, 30-minute was still bearish. I said this was almost a good trade. We followed all the... Oh yes, I don't remember what I was going to say now. It was almost a good trade. We followed all the rules. We entered on a fair value gap, a break of structure. But we noticed, and I ignored, the 4 hour equal lows, 3 equal lows, which had just been swept. So I should not have entered, and I was convinced, however, I was convinced that the 5-minute... that it was going to go down because of how bearish the 5-minute was looking. Higher time frames hold higher power. That's what I needed to be reminded of through this trade. So let me show you guys this actually. Right here, these equal lows, 1 2 3 4. It was 4. And it just got swept right here, and I was gonna enter a long actually because we just got swept, but I entered a short because the lower time frames convinced me. Not the worst trade, but it was a bad trade because I ignored this confluence, which is in my trading rules. And the next one was, oh wait, here's the second one. See, we shorted. These were our take profits, but we should have actually longed. We would hit some real nice take profits. If you see this blue line right here where my mouse is scrolling over, this blue line here, it's kind of mixed in with the session lows, Asian session lows. This is the equal lows that got swept, and they got broken, retested. Eventually the downtrend continues, but it's just bullish confluence when they get swept to long. Final trade was a short, a small one, 1%, 1.1%. 4 hours bearish, 30 minutes bearish. Good trade, followed all rules, entered based on a fair value gap, and an inverse fair value gap and a break of structure. All of these trades were London session except for our first big win, which carried over all the way into New York. So here it was. We shorted over here, boom, hit take profit, and then came back to our stop loss in break even. There was one thing I wanted to say. This fair value gap and inverse fair value gap, do you see fair value gap, inverse fair value gap, win. If we look back for other confluences that we entered on, you'll see that majority of the times we enter based on both a fair value gap and an inverse fair value gap, like right here, we took a win, and this was a big win. So entering based on more confluence than one, for me, in my case, what I've noticed, if I enter based on a fair value gap and the inverse fair value gap, I'm pretty much not guaranteed, but it's a very high confidence trade, especially if it aligns with bias. Here was a good one. Fair value gap, inverse fair value gap, another win. Like, I don't think I've entered on a fair value gap and an inverse fair value gap and taken a loss. So that's all I'm saying, guys. Fair value gap, inverse fair value gap, extra confluence. That's all. See you guys in the next one. Thanks for watching. Cheers.